Hello dear students, welcome back to our channel Bhavani Commerce Academy. Today we will see working capital requirement. It's a very important question from working capital decisions. Most of the times it is repeated in the examination. So listen carefully. Okay. Prepare an estimate of working capital requirement from the following date of a trading concern. Here given some details. See. Projected annual sales 80,000 units, selling price 8 per unit, percentage of profit 20%, and average credit period allowed to debtors 10 weeks, average credit period allowed by suppliers 8 weeks, and average stock holding in terms of sales requirement 10 weeks. Allow 20% contingencies. So, if you want to calculate estimated working capital requirement, here you require current assets and current liabilities, because working capital is nothing but the difference between the current assets and current liabilities. So from these details, what are the current assets, what are the current liabilities, we need to identify first. Okay, see here, average credit period allowed to debtors. Debtors is a current asset. Sometimes they will give average credit period allowed to customers also. Customers are nothing but debtors only. Okay, so it is a current asset. Okay, then average credit period allowed by suppliers. Suppliers are nothing but creditors. So it is a current liability. Okay, average stock. Stock is a current asset. Okay, so only we have three details regarding the current assets and current liabilities. One is debtors, second one is creditors, and third one is stock. Okay, suppliers are the creditors. Customers are the debtors. And here given annual sales and selling price. So 80,000 units at the rate of 8 per unit. Selling price per unit is 8 rupees. So if you multiply these values, we'll get sales value. Okay. And profit percentage is 20%. So here given 20%. So if you want to calculate a debtors value and creditors value and stock value, you require cost of sales. That is nothing but total cost. Okay, for that total cost, these details are useful. Okay, so total cost is not given in the question. So you need to find out that. So by using this formula, you'll get total cost. Cost of sales are nothing but total cost. Sales minus profit. Okay, how to get sales? Here given sales, number of units. Sales is equals to total number of units sold 80,000 at the rate of 8 per unit. So what is the value here? 80,000 into 8. 6,40,000. Okay. Then profit. What is the percentage of profit? 20% on sales. So this percentage is on sales. What are the sales here? 6,40,000. 6,40,000 into 20%. So 1,28,000. So profit 1,28,000. It is on sales. Percentage on sales. When you are having percentage of profit, that will be calculated on sales. Okay, these two values are applied in the formula. Our sales are 6,40,000 and our profit is 1,28,000. So what is the value here? 6,40,000 minus 1,28,000. 5,12,000. So what is this 5,12,000? Total cost. So this is required to calculate debtors, creditors and stock in our question. Okay. So from this question, we have current assets and current liabilities. So debtor, stock, these two are the current assets. Creditors, that is suppliers, are nothing but creditors. Creditors are the current liabilities. So if you want to calculate working capital, you require current assets and current liabilities. Yes. So first we need to write current assets. Under current assets, we have debtors and stock. Our total cost is 5,12,000. By using this total cost, we need to find out the debtors value, stock and creditors. 5,12,000 into What is the credit period of debtors? 10 weeks. So 10 divided by, out of total weeks are 52 weeks in a year. Yes. So what is the value? Into 10 divided by 52. 98,461. Okay. Then stock. How to calculate stock? Same. What is the total cost? 5,12,000 into what is the credit period of stock? Here stock credit period is 10 weeks. 10 divided by 52. Okay. So here also same. So you will get same value. 98,461. So these two are the current assets. Take the total of current assets. 98,461 plus 98,461. 1,96,922. Okay. Then current liabilities. Under current liabilities only we have creditors. So here creditors also we can calculate by using total cost only. So 5,12,000 into what is the credit period of creditors? 8 weeks. 8 out of 52 weeks. 5,12,000 into 8 divided by 52. 78,769. 78,769. Okay. So what are the current liabilities here? Only single current liability is here. So take the total in the outer column. 78,769. So current assets minus current liabilities. You will get working capital. Net working capital. Current assets minus current liabilities. 1,96,922 minus 78,769. 1,18,153. Okay. Here we need to add contingencies. In the question 20% contingencies are there. So how to calculate 20% contingencies on 1,18,153? Apply 20%. Then you will get 23,630.6. Okay. Just add this value to that value plus 118,153. So what is the total here? 1,41,784. 1,41,784. Okay. So what is this? Working capital requirement. Requirement working capital. Here one more question we have. From the following information, compute working capital requirement for the company. Annual sales 2 lakhs. Selling price 8 per unit. So 2 lakhs into 8, 16 lakhs. And percentage of profit on sales 25%. On to 16 lakhs, you need to apply 25%, you will get profit. That profit is deducted from the sales, you will get total cost. By using the total cost, you need to find out assets values and liabilities values, current assets and current liabilities. Average credit period allowed to customer. Customers are nothing but debtors. 8 weeks. And average credit period allowed by suppliers. Suppliers are nothing but creditors. Average stock. Okay. Debtor is a current asset. Creditor is a current liability. Stock is a current asset. Holding in terms of sales requirement 12 weeks. Allow 10% contingencies. These contingencies we need to add after deducting current liabilities from current assets. You will get net working capital. For that net working capital, you need to add 10% contingencies. Then you will get working capital requirement. Okay. Do this solution. Thank you for watching.